Welcome to the Phillip Futures Facebook Live session. So just a very quick introduction about myself. My name is William and I'm a dealer and also a marketing staff at Phillip Futures. So today I'll be sharing about soybean and corn. I'm going to share about soybean and corn, and we will explore about the opportunities that is within soybean and corn. Okay, so before we start, just want to do a very quick disclaimer. So whatever that I'm going to share today is actually just a knowledge sharing purpose. So it doesn't really constitute any investment advice. If you want to know more about this product, you need to, if you want to know more about futures trading, you need to do your own due diligence as well. Okay, so this will be the outline that I'm going to share today. Okay, we'll start from introduction to tell you some background about soybean and corn. Then we will try to understand the supply and demand of soybean and corn. Followed by I will share my personal point of view. Why is this the best timing to really look into soybean and corn? There is no better timing than right now. Okay. And then we will look into the correlation between soybean and also on the soy oil. Okay, and just for your information, soy oil actually affects the movement on the crude palm oil if you are actually monitoring crude palm oil. And lastly, we'll just look at some price action on soybean and corn. Okay, let's start from the background of soybean and corn. So soybean and corn is one of the most crucial grains in the world for animal feed. And 70% of US produced soybeans are used for animal feed, and more than 50% of US corn's production are used for animal feed. So basically we can conclude that animal feed is the main consumer, animals are the main consumer of US soybeans and corns. Okay, and these two products, they are actually substitutable products, because if soybean is more expensive than corn, then the manufacturer of animal feeds can try to use more corn, okay, because soybean is more expensive. So when corn is more expensive, the manufacturer can tend to use more of the soybean. Okay, now let's look at a very quick comparison on the nutrition side between soybean and corn. Okay, if you look at the protein and fat, soybean actually have 3 to 4 times higher content of protein and fat. So this is also one of the reasons why soybean is more highly priced compared to corn. Okay, because if you want your animals or your pig to be fat and to be heavy, meaty, you need lots of protein and fat to put weight on your animals. Okay, other than this reason, there is another reason why soybean and cotton are such a good substitute products. Okay, if you look at corn, we start from corn here. If you look at corn start to harvest in farmers start to plant corn in April until June, and soybean the farmers start to plant in also end of April until end of June. Okay, so the planting period for corn and soybean are quite similar. What about harvesting? For corn, the harvesting period starting from September until the end of November. But for soybean, the harvesting period starting from September until end of October. So if you see two of these products, the planting period and the harvesting periods are actually quite similar. And the soil that the farmers use to plant these two crops are actually quite similar as well, which is a very good substitute product. So farmer can choose to either grow either one of these products on the same land. Okay, so which makes it even more, there is higher similarities in between. Now let's look at corn to soybean to corn ratio. This article is actually taken from the USDA website. USDA means the United States Department of Agriculture. Okay, according to the article, the soybean to corn ratio was about 2.51. That is the average ratio, okay, 2.51. But if you look at the soybean price lately, the current soybean price is about 10.38, and the current corn price is about 3.75. Okay, if you look at these two ratios here, you divide 3.78 with 3.75, 10.73, sorry, I repeat. So if we take the soybean price of 10.38, divide with the corn price of 3.75, okay, the ratio we will get is 2.76, which is higher than the average soybean to corn ratio of 2.51. So this means that soybean is actually more expensive than corn. So in this scenario, what does this ratio tell us? As a farmer, you can choose to plant more soybean because soybean has higher value than corn. But we as a trader, we may try to trade corn because corn is more undervalued than soybean. So both of these products, they will usually move in the same direction. So if soybean is moving a lot faster, eventually I believe corn will tend to catch up as well. So these are the type of ratio we as a trader can look at as well. Okay. Now next, let's look at Okay, now let's look at the supply and demand of soybean and corn. We start from the supply side. For soybean, Brazil is the biggest country. Brazil is the biggest country that produces soybean. Used to be US back in before 2018. US is the biggest soybean production country, but after 2018, Brazil take over as the biggest production country, followed by the US and the Argentina. So three countries basically just produce more than 80% of the global soybean. Okay, take note of these two figures. Brazil 36% and US 32%. We will use these two figures to analyze our articles or our news at the later stage. Now let's look at corn. Let's look at corn. So for corn, US is the biggest production country, which is 33%, and China itself accounts for 22% of global corn production, and followed by Brazil. Okay, so if you look at this, because of China, they actually produce quite a fair bit of corn, so they tend to import less corn compared to soybean because they actually produce a lot of corn themselves. Now, let's look at consumption part. After we understand the supply, where does the supply come from? Which country does the supply come from? We need to know the demand side, which is the consumption country. So first, soybean. China itself alone consumes 30% of global soybean, okay? And it imports 61% of global soybean imports. So for all the countries that export soybeans, 61% of them actually export to China, okay? So you can see how big is the soybean demand in China, okay? Followed by US. So US consume quite a fair bit of soybean as well, but they are net export because they produce more than what they consume, okay? Followed by the European Unions, okay? Now, after we look at soybean, let's look at corn, the demand side on corn. Okay, for corn, US is the biggest consumption country. They consume 28%, but because they produce a lot of corn, they are still a net export country. But on China, if you look at China, they consume 24% of corn, but the import is only 4% of global corn imports. Why? Because they themselves produce 22% of global corn, but it's still not sufficient. Okay, so basically we are and followed by European Union. European Union use a lot of corn as well, and they import 14% of global corn imports. So European Unions plays a very important role on corn price because they import 14% of global corn imports. Okay, so if we are targeting on demand side, these are the three countries that we need to focus on to see what are the demands on corn that they are these three countries is looking at. Okay, now let's move on to why is this really the best time to export soybeans and corn, which is the US soybean and corn. Okay, first reason, if you look at this article, so this article is from again, it's from USDA website. Okay, the USDA, the United States Department of Agriculture, they will come up with a new market outlook every month. So every month they will update the market outlook on corn, on soybeans, etc., etc. They will update it once a month. So you just got to read it to understand the latest development, be it the weather, be it the production crop, or be it the demand side, the export. Okay, if you look at this data, the article said that the record high prices sparked Brazil's soybean area expansion. This is the big title, okay? But if you read down, everything inside here, this article, at this part here, is actually referring to Brazil. And if you look at this, it says that, in fact, local scarcities are now compelling some domestic users to import soybean from other country. Imagine this. Brazil is the biggest soybean production country that I shared just now. They produce 36% of soybean production, but right now they need to import soybean from other countries for their own usage. So meaning to say they basically just sold almost everything they produce. This means what? Demand is greater than supply. Okay, so if Brazil, as the biggest soybean production country, is running out of soybean, meaning to say, if China or any other countries want to buy soybean, they can only go to US, because US is the second largest soybean production country. Now, if we continue to look downward a bit over here, if you read this, the planting by growers will commence later this month, yet they are reported to have already sold more than half of the expected soybean production. So for planting stage in Brazil, it started in September, October. Okay, so in September, October, the Brazil farmers will start to plant soybean. But you look at this sentence, it says that even before they harvest their soybeans, already more than 50% of their upcoming soybean crop has been sold. Okay, you see the demand side. So this is one of the reasons why we see a soybean price rally on US seaboard soybean futures contract. Okay, now let's move on to the second reason. Okay, if you look at this second reason, this article is, this thing is also, I got it from the USDA latest market outlook on the 15th of September. If you look at this, it says that exporters of US soybeans have booked record high sales for this date and are nearly 4 times of the level a year ago. So meaning to say, the outstanding sales on US soybean to China, if you just look at China alone, it's a lot higher compared to the few years ago. You look at it, it's almost the highest over the 8-9 years. You see, this is the demand in China right now. But if you look at the total export, it's the highest definitely over the past 10 years, and it's 4 times higher than year 2019. So these are the demand side that we can see according to the USDA report in on the 15th of September. So this is the second reasons why we see a rally in soybean price as well. Now, the third reason, if you look at this article is dated in August. If you look at it, why is there such a, we understand the supply side. Okay, now we go into a detail on why is there such big demand in China. Okay, so in China, there is a African swine flu in China in late 2018. Okay, there is African swine flu. So actually on US CME exchange, we have a lean hog, which is the pig futures contract. So if you look at that futures contract, you can see that the price of the lean hog, which is the pig, tumbled at the second half of 2018 and only recover in 2020 April. Okay, the price of the pork of the pig only recovered this year April. So why is there a recovery in pig price, in the pork price? Because there is a demand for it. So when China have this African swine flu, China people, they tend to eat less of the pork or the pig. Okay, they eat less of those, and they, even for exporting, even for imported pork into China, they tend to eat lesser as well because they are afraid of the African swine flu. But this swine flu has been resolved. So all the disease, all the affected pig, they have disposed it, and they need to raise new piglets for them to grow and to meet the new increased demand in pork. Okay, so because of this, there is a strong demand that China needs lots of soybean and corns and all these grains to feed their animals. Why soybean is such a, because of the protein and the fat. Okay, and in US, remember just now very early that I shared that 70% of US soybeans and more than 50% of US corns are used for animal feeds. which is why we see a very strong demand in China right now. Okay, and just to share something extra, okay, if you do follow the phase 1 of the trade war between China and US, in January, Donald Trump, US actually they signed an agreement with China saying that they need to purchase up to 36 billion of agriculture's products. China need to purchase 36 billion of agriculture products from the US, okay? But up to July 2020, okay, which is 7 months, US has only purchased 8.6 billion of US agriculture's products. Okay, this is slightly behind. Why is this slightly behind? So if you look at it, the trade war agreement is spent across 2 years of 36 billion. So meaning to say, every 6 months, China need to buy at least a minimum of 9 billion. But up to 7 months, they only bought like 8.6, which is slightly behind. Okay, so which means that for the second half of the year, China need to increase their purchase on US agriculture products to meet the target. Okay, this is also why one of the reasons why there is a higher than usual purchase from China on US agriculture's products. Okay, now let's move on to the correlation between soybean and soy oil. Okay, if you look at soybean and soy oil, the price are actually quite identical. So when soybean price goes up, soy oil price tends to go up as well. So every time if you manage to identify a divergence, it can be an opportunity for you to long soy oil instead of soybean. Why is this reason? Because soybean is the raw material to extract the soy oil. So basically, if the raw material price increase, the soy oil is supposed to increase as well. Okay, so on the 9th of September, there's the divergence for 3 days that soybean price continuously going up, showing strength, but soy oil just moving a sideways in a consolidation without much momentum. So after that, suddenly soy oil catch up. So the gain, the percentage, the gain we see in soy oil is actually higher than soybean moment soy oil catching up. Okay, so these are the correlations between soybean and soy oil. And also to take note that for traders that are trading the crude palm oil, we need to monitor soy oil as well, because crude palm oil and soy oil are substitutable products as well. So whichever that is cheaper, the manufacturer will tend to use more of those. Okay, and based on the price action on soybean lately, I believe that we will see strong price movement in soy oil and will cause our CPO price to move strongly as well. So take note for short traders that are really want to short it, need to manage a risk really well to prevent a breakout on 3002 level, because moment CPO breakout at 3002, it will be a 9 years consolidation breakout. Okay, now let's look at the price action part. Okay, we start from soybean. This is a weekly chart on soybean. So soybean breakout of its 2 years consolidation on 31st of August, which is 3 weeks ago. We see a breakout here. So breakout means that, to me, breakout always doesn't really mean much, provided the breakout can sustain, which means after the price breakout, it needs to continuously standing above the breakout to show more buying strength. Okay, now we look at 4 hours chart. Okay, we look at 4 hours chart. If you look at this chart, soybean is actually respecting this 20 days moving average on a 4 hours chart quite well. So this can be a very good for you to monitor. I'm not saying that moment it touched 20 days moving average, it will bounce up straight away. But moment it reached this level, it can be an opportunity for you to find an entry signal. For example, if you look at this one, is this level, is this supposed to be a resistance? And here it turns support. You see, this is the kind of thing that we want to see over here before we jump into the contracts to trade, to participate. So the moment you see a change of resistance, turn support, then we can try to participate with a stop loss at the lowest part. Okay, so soybean has been showing great upward momentum. Okay, now let's look at corn. For corn, we see a breakout. We see a breakout here as well on the end of August. So remember, like I shared earlier, a breakout means nothing. But if a breakout can sustain above it, moment it pulls back, it means that there are strength in this product. You see, it means that there are strength in this product. So basically, we just need to wait for corn to really pull back on a smaller time frame, and then we can try to find an entry signal. So same like soybean on 4 hours chart. For corn, we can see that it is also respecting the 20 MA quite nicely. Okay, it is respecting it nicely. So basically, we as a trader, we do not just queue here and wait. Okay, we wait for it to retrace. Okay, we wait for it to retrace. We see something like we see something like resistance turn support. Okay, so like this one. Suppose this is a resistance, but now it becomes a support. So these are the level that we want to see before we jump into we open our position. Okay, because it has shown great momentum, and this level here, if you look at this line here, this is actually the breakout line over the over in the previous one. This line here is actually this line. Okay, so after it breaks out, you see retrace, stand above it, which means is there are sufficient buyers to support the corn price. Okay, and lastly, we look at soy oil. Okay, you remember just now when I shared the soybean and soy oil correlation, soybean has been showing great upward momentum, but soy oil is still here, sideways. You see, sideways. So moment it breaks up, it goes up really fast and furious. You see, okay, and it has breakout on the 11th of September. It breaks out a bit later, okay, compared to soybean and corn. So this product here, we need to wait for it to pull back. If the pullback can support above the previous resistance, it shows that there are great buying momentum. There are sufficient buyers. The buyers are stronger than the seller, which is why we always need to make sure that the buyers are stronger than the sellers before we participate. Okay, and okay, just to conclude my sharing just now on the fun fact on soybean and corn. Okay, so soybean demand, the biggest consumption country is China. And for corn, US is the biggest consumption country. For supply side, Brazil, US, and Argentina account for 82% of the global production. But for corn, US, China, and Brazil, they account for 64% of global production. Now, let's move on to climate. I didn't touch on climate just now, but for your information, climate plays a very important role on agriculture products, okay? Because the weather of United States will affect the harvesting period. So if the weather is really bad, it damages the crops, then the production can drop. When production drop and the demand side maintain, the price will increase. Okay, so it's really crucial for us to monitor the weather in the US, especially the LOA. Okay, LOA in the United States is the largest soybean production. It's the second largest soybean production states in the US and is the largest corn production states in the US. And lately, according to USDA report, or you can Google more about it. Lately, there is a bit of dry weather. It's like a drought, you know. Weather is a bit dry on LOA, which might decrease the production or the harvest of soybean and corn in LOA. Okay, so this is something that we need to constantly monitor if we are trading agriculture's products. Okay, next, soybean and corn are substitutable grains in the animal feeds. Okay, and also just for your information, if you try to Google Brazil actually doubled their export to China on poultry, beef, and pork compared to last year. Okay, remember just now I shared that China has this African swine flu in late 2018, 2019 until early 2020. Only they resolved this African swine flu. So after they resolve it, people tend to come back to eat more of these beef, pork, poultry, and stuff. So you can see that the export of the poultry to China to determine how is the demand side on all these, especially pig, because China is the biggest pig consuming country. Okay, so we can try to monitor the export of all these animal product, all the meat product to China, to determine what kind of demand we are expecting in China. Okay. And lastly, soybean and corn are traded in US dollar, so we need to monitor the US dollar index. Okay, so for US dollar index, you just need to just go to TradingView, you type on US dollar index, you can try to monitor the strengthening of US dollar. Why is this happening? Because soybean and corn are traded in US dollar. So when US dollar got stronger, these buyers, they have less purchasing power, which might cause the demand side to drop. Okay, these are the concept behind the US dollars and US dollar traded commodities. Okay, so just for your information, if you are interested to participate in soybean and corn trading, under the CME exchange, we do offer soybeans, the main contract, or the mini soybeans if you have if you do not want to put so much initial margin in to participate. We have a smaller contract, which is only USD $330. And also for corn, we have a mini corn as well, and the margin is only USD $187. Okay. And for the initial margin on bigger one will be 935. Okay. So these are the contracts that are available to trade. If you want to know more, you may try to contact us via our Facebook or go to our website. Just try to search Phillip Futures. Okay, you should be able to see our website. We have a contact us page. Leave us your contacts, and we will try to contact you as soon as possible. Okay, so yeah, I guess that is about all for my sharing part. And yeah, if you want to open an account, we do have online account opening that you can just go to our website, try to find the online account opening. You can do it at the comfort of your own house. Okay, and also don't forget to subscribe us on Facebook, YouTube, or even on Telegram. Okay, so yeah, thank you very much for joining in us. Okay, that is all on my sharing. If you have any questions regarding soybean and corn or trading US products, feel free to chat with us, or you can even request to talk to me. I might be able to share some insightful details or insightful information to help you out. Okay, thank you, and that's all. Thank you. Bye bye.